Good evening. In today's session, let's discuss regarding Indian banking system, and the subtopics are structure, development, and reforms. In today's session, let's discuss regarding structure and development. In the next session, we will be discussing regarding reforms. What exactly are these? Whenever we say Indian banking system, the first bank that comes to our mind is RBI, Reserve Bank of India, regarding which we have discussed many points so far. Now, in this session, let's try to see, apart from knowing more points regarding RBI, we'll also try to understand what are these scheduled banks, what are these non-scheduled banks, and what are these cooperative banks. All these things we'll try to understand. We'll also be coming across with public sector banks, private banks. We'll also be coming across with foreign banks and payment banks. So which is the latest one? Everything let's try to understand in this particular session. First, I would like to show you one pic here so that you will be in a position to understand what exactly is the what exactly are the various types of banks we have. Kindly have a look at this very clearly. Please write down. So this is the types of banks. These are divided into two categories. One is the scheduled banks and other one is the non-scheduled banks. Please write very carefully so that in the examination you should have a clear-cut idea on this one. Without understanding this, understanding the rest of the topic will become very difficult. Clear? That is the reason why I am cautioning you as your senior. Look at this. When it comes to scheduled banks, again they are divided into scheduled commercial banks and scheduled cooperative banks. Very important one. So under the banking system, one type is scheduled banks, and in that scheduled bank you have scheduled commercial banks and scheduled cooperative banks. Again, in the scheduled commercial banks, you have public sector banks, you have private banks, you have foreign banks, you have SFBs, and you have the RRBs, regional rural banks. Clear? And on the other side, if you are coming across with the scheduled cooperative banks, that is divided into two types again. One is the state cooperative banks and another one is the urban cooperative banks. Very important one. Please draw this chart very clearly and carefully. This must be there in your mind so that it will become easy for you to answer the question if the question is related to types of banks. Clear? So now let's go ahead. Same points are given here, but I will tell you here. The Indian banking sector is broadly classified into scheduled banks and non-scheduled banks. So we know this. Now this point is very important for you. Look at this. All banks that are included in the second schedule of RBI Act of 1934 are considered to be scheduled banks. From here you will get a question. Clear? Which of the banks are mentioned in the second schedule of RBI Act of 1934? And your answer should be scheduled banks. Otherwise they will ask you, scheduled banks are mentioned in which schedule of RBI Act of 1934? Second schedule. Very important, right? For some of you, my dear friends, let me tell you, when you read about the constitution, you will come across with the schedules, right? I am not mentioning about the constitution and I am not mentioning about those schedules that are mentioned in the constitution. These are the schedules that are present in RBI Act of 1934. Out of those schedules, second schedule mentions about the scheduled banks. Meaning, so what are all the names of the banks that you come across in the second schedule of RBI Act of 1934 are considered to be scheduled banks? So simple. Am I clear? Now, these banks comprise scheduled commercial banks and scheduled cooperative banks. We already understood. Again, scheduled cooperative banks consisting of the state cooperative banks and scheduled urban cooperative banks. So the same points we have discussed in the earlier, this chart also. But the one point which is very new here is the second schedule of RBI Act. Clear? And there you have the mention regarding the scheduled banks. Very, 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 very important point. From here, let's go ahead and have a discussion. Now, first we'll be discussing some points regarding RBI. But let me tell you, my dear friends, regarding RBI, I already discussed with you in the earlier classes. Clear? And we'll be coming across with some points which we already know. And whenever we come across with those points, I will not go for any discussion because the discussion has already been done. So there is no point in discussing what we have already discussed. It will not make any sense. That is the reason why whatever we have discussed in the earlier class, I will just skip it and will be going ahead. But once RBI is over, whatever the things that are coming across, every point is really important for us. Now look at this. When it comes to RBI, as we know, established on 1st April 1935 under RBI Act of 1934, we know. Originally established in 1935 in Kolkata, at that time it was called Calcutta, and later it has been shifted to Bombay in 1937. Now it is called Mumbai. Clear? And meaning the central office of RBI is located in Mumbai. That is called headquarters of RBI. This is the place where exactly RBI governor will be sitting, and this is the place where the policies are formulated. That is the reason why the location of RBI is important. Where exactly you are making the policies are important for the examination point of view. And again, in one point, RBI, which was established in the year 1935, was under the ownership of the private people. So private owners were maintaining, but after independence in 1947, in the year 1949, RBI has been nationalized, meaning that has been taken over by the government of India. Now it is fully owned by GOI, Government of India. Clear? So all the points are known points only. Let's go ahead to discuss more points here. So this one is really important for us. If you look at very closely, right, I want you to, if possible, please write down. Otherwise, you try to remember this. But I suggest you to write it down. So this is regarding the preamble. So whatever the lines you see in the black color here, this is the preamble of RBI. And this preamble describes the basic functions of RBI. Very, 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 very important one. What do you mean by preamble? We learnt regarding preamble when we discussed about the Constitution of India. Preamble is considered to be the introduction to the Constitution of India, and that preamble will be there for every institution. That preamble is there for every act. And if you look at this Reserve Bank of India, it also has got a preamble that is nothing but the introduction to the Reserve Bank of India, and that preamble mentions about the basic functions of RBI. Am I clear? So tomorrow what may happen in the examination, they may give you all these lines as it is in the examination, and they may ask you what exactly does it represent. So this is representing the preamble of RBI. Clear? Very, very important one. Without mentioning the name of RBI, they may give you all the lines in the examination. That is the reason why, right, don't get panicked in the examination. Just read the points, then you will be in a position to understand. Then you will come to a conclusion that this is the preamble of RBI. Is that okay? Kindly remember, for those people who are not aware, please make sure yourself very clear that these types of preambles are present for every institution and every act. And whatever we are looking at on the screen is the preamble of RBI. So this mentions about the to regulate the issue of banknotes. Banknotes means currency notes, and keeping the reserves with a view to securing monetary stability in India, and generally to operate the currency and credit system of the country to its advantage, to have a modern monetary policy framework to meet the challenge of an increasingly complex economy, to maintain price stability while keeping in mind the objective of growth. These are the basic functions of the RBI, and these are mentioned in the preamble of RBI. Is that okay? Hope you remember, my dear friends, when we have discussed regarding RBI, we have discussed about all these points. Clear? So from here, let's go ahead and have a discussion. Look at this. So these are the functions of RBI. These functions we have discussed in the earlier classes, right? And any one of you who have not watched those classes, please go through those classes, and all the videos are available in the same sequence, and please follow our classes in the same sequence in order to avoid the confusion. Clear? So when it comes to the functions of the RBI, so this is the monetary authority, right? We have discussed this. Second one is the regulator and supervisor of the financial system, right? And what is the objective of this? That also we have discussed. So from here, let's go ahead. So this is the manager of foreign exchange. This is the issuer of the currency. We know what is the meaning of this. We have already discussed, right? And it has a development role. It has the role of regulator and supervisor of payment and settlement systems, right? And objective also we have understood. Related functions also we have understood, like it is a banker to the government, it is a banker to the banks. So all these points we have understood. Clear? And this is just like a revision. So from here, let's move ahead and try to understand more about the the so-called public sector banks, private banks. Why are they called private banks? Why are they called foreign banks? All these things let's understand now. But before going ahead, we have a question. We love to answer questions, and we have a question here. Look at the question here very carefully. Which of the following statements is or true regarding the banking system in India? Two statements are given. Both the statements are related to banking system in India, and we have to find out of the two statements which one is correct, which one is wrong, right? Maybe either two may be correct, two may be wrong. By reading this, we'll be in a position to understand. The banking ecosystem in India is providing impetus to economic growth and development of the country. Without any hesitation, this is correct. That's it, right? So because of the banking system only, so we are getting so much of support with respect to the development of the economy. Am I clear? So statement A is correct. Because statement A is correct, this is not my answer, and this is also not my answer. I am left with one statement and two options. Read the second one. The banking system caters to the specific and varied financial requirements of different customers and borrowers. That is also correct. Meaning is simple. So our banking system is providing the loans for the people as well as the business system, and ultimately that is leading to the economic growth of the nation. So statement B is also correct. Hence my answer should be option 3. That's it. Clear? So once you have clear cut knowledge regarding the subject, you will be in a position to answer these type of questions very, very easily. Clear? So let's go ahead from here and let's check whether option 3 is the correct answer or not. This is absolutely correct. The only thing, my dear friends, you need the patience to read the question and the statements clearly and completely. Don't come to a conclusion without reading the statement completely. Clear? Now, so additional information, my dear friends, kindly have a look at this one. Currently, we have 137 scheduled commercial banks, and they are providing banking services in India. scheduled commercial banks. In addition, cooperative banks and local area banks are also providing banking services in different locations in the country. Clear? Next, did you hear regarding NBFC anytime? Yes, you have. Most of you might have heard regarding NBFC. Though some of you may not be aware of the functions of NBFC, I'll tell you now. NBFC stands for non-banking financial companies. NBFC stands for non-banking financial companies. So rest all what we are discussing, they are the banking companies. But you also have another system that is called non-banking financial companies. Clear? What are they? What is the purpose? Why they have been established? Let's try to understand. For the purpose of lending to specific sectors, around 9,516 non-banking financial companies and 5 all India financial institutions are also catering to the needs of the borrowers. Meaning, apart from the banks, we can also take the loans from the NBFCs. Am I clear? So they are also catering to the needs of the people here. Please remember one thing. We know entire banking system, public sector banks, private sector banks, foreign banks, every bank that is present in India must work under the control and guidance of RBI. Yes. But what about NBFC? Under whose direction NBFCs will function? Very important one. NBFCs will also function under the control and guidance and regulations of RBI. That's it. Am I clear? And after some time, we'll be understanding more differences between, right? So this banking and NBFCs. Clear? Look at this. So when it comes to the banks, already we know this one. So what are all mentioned under the second schedule of RBI Act? They are called the scheduled commercial banks. Other than public sector banks and regional rural banks, all other scheduled commercial banks are granted banking license by RBI under Banking Regulation Act of 1949. Please remember this one. Every bank that is operating in India must have a license. That license is provided by RBI under RBI Regulation Act of 1949. Without the license, a bank cannot operate. The license is valid as long as that particular bank is obeying and obliging the directions of RBI. This license has to be renewed periodically by the banks. The moment there is a violation of the rules, the license can be cancelled by RBI and that bank cannot function in India. Clear? So these are all the measures that are being taken by RBI under Banking Regulation Act of 1949. Similarly, RBI will also give licenses to cooperative banks for providing banking services under the same act called Banking Regulation Act of 1949. Very important. Am I clear? So kindly remember each and every point. Any point may be a question in the examination. Let's look at more points. Another very important point. After this 1991 economic reforms, we have allowed foreign direct investment in Indian companies. That FDI is also permitted in the banking sector. That FDI is permitted in both the private sector banks and the public sector banks. Very important one. So when FDI is coming to India, should you have to take the permission from the government? Sometimes yes, sometimes no. If FDI is permitted in a particular sector without the prior approval of the government, that is called automatic route. Meaning it, without taking the prior approval from the government, you can you can bring in FDI in your company, and that is called automatic route. But sometimes you may need the government prior permission, that is called government approval route. In the banking sector today, in the private sector, if you are calling for FDI, if you are bringing in FDI up to certain percentage, that is automatic route. Beyond that certain percentage, you should take the government approval, that is called government approval route. Am I clear? So now I'll show you very clearly. In private sector bank, please note down very clearly, right? I am talking only about the the banking sector, and that to do in the private sector banks. Is that okay? Right? So 49% of the, up to 49% FDI is permitted, and that is the automatic route. Meaning if you are bringing in 45%, up to 49% of the FDI, no prior requirement of the government, and it is called automatic route. But if you are going beyond 49% and up to 74%, that must be through government approval route only. Very, 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 very important. Hope I am clear, my dear friends. Is that clear? You write down the points very clearly. When government approval route comes into the picture, when automatic route is permitted, these will be the questions in the examination, and you must have the clear-cut clarity on this one. Similarly, is it permitted for FDI even in the public sector banks, even in the government banks? Very much permitted. But there is a limitation. FDI in public sector banks is permitted up to 20% only. Very, 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 very important. And that to government approval route. Very, 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 very important one. So whatever the page that you are looking at on the screen, these percentages are really important for the examination. Please write down very clearly, carefully, and revise systematically later. Is that clear? Now let's go ahead and discuss more points. Look at this for your better understanding. So these are the scheduled commercial banks, and these are the cooperative banks. Is that clear? In the scheduled commercial banks, you have public sector banks, you have private sector banks, you have foreign banks, you have RRBs, regional rural banks, you have small finance corporations. So this is called, small finance banks. And apart from this, the latest one, you also have the payment banks. Clear? Very, very important one. Please write down. They all fall under the category of the scheduled commercial banks. Clear? So when it comes to cooperative banks, state cooperative banks, central cooperative banks, and primary cooperative banks. So this is the structure, and I want you to remember the whole structure very clearly. Clear? Now, so let's go ahead. Look at this. So when it comes to, the list I have already given here, whatever you saw in the earlier pick, so the same has been listed over here. Is that clear? Next is the public sector banks. So what are these public sector banks? For example, if you look at, State Bank of India, you have, if look at, Punjab National Bank. So these are all the public sector banks. So they are owned and controlled by, the government. Clear? So when it comes to public sector banks, they are constituted under State Bank of India Act of 1955 and Banking Companies Acquisition and Transfer of Undertakings Act, 1970 Banking Companies Acquisition and Transfer of Undertakings Act of 1980, and presently there are 12 public sector banks. Very, very, very important one. So these are the Banking Companies Acquisition and Transfer of Undertakings Act. So any establishment that is established through this act, they will be falling under public public sector banks which are owned by the government, where not more than 20% FDI is also permitted. That FDI should be only through the government approval route. Am I clear? So this is the public sector banks, and I gave you some examples also. Clear? Next, when you go to the foreign bank, what do you mean by foreign bank? This is a bank that has headquarters outside India, not in India, but runs its offices as a private entity at any other location in India. Very important. These are called foreign banks. So whatever you are calling foreign banks, say for example HSBC. So this is a foreign bank. Its headquarters is located outside India. Clear? Such banks are under an obligation to operate under the regulations provided by RBI as well as the rules prescribed by the parent organization located outside India. So what is the meaning here? The rules that are provided by RBI must be followed by the foreign bank when you are operating in India. That foreign bank should also follow the rules that are given by its, the head office. So that is the reason why the operation rules must be simultaneously cooperative in nature. So they should be matching. If there is any mismatch, that bank cannot work in India. Am I clear? And foreign banks are those banks whose headquarters are located outside India. Right? So next is the private sector banks. So these are the banking companies licensed to operate under the Banking Regulation Act of 1949. So what are all the private banks we have today? They are established through Banking Regulation Act of 1949. Again you have RRBs, regional rural banks. I told you some time back, our banks mostly operate in the urban areas. But our farmers, our peasants who are living in the rural area, they need the support of the banking system. That is the reason why government in the year 1976, it has established the regional rural banks. Clear? And basically these are meant for the serving the people in the rural areas. Clear? RRBs are the banks established under RRB Act of 1976 with the aim of ensuring sufficient institutional credit for agriculture and other rural sectors. What do you mean by institutional credit here? This is the credit that is being given by an institution like a bank. Otherwise, if you look at before 1976, even today also some places it will happen, right? So these farmers are depending on the local money lenders. They are depending on local money lenders because you don't have the banking system. But if you establish a banking system, that is called an institution, and if that institution is providing credit, loan to the farmers, that is called institutional credit. Otherwise, money lenders, they will give the money, they charge huge interest rates. But when it comes to the institutional credit, that is the bearable and that is a long term. Am I clear? Very important one. Right? And when it comes to the RBIs, they are owned jointly by Government of India and the state government and the sponsor banks. So they have the joint ownership. Very important one. Next is the SFB, Small Finance Bank. So this is also licensed under Banking Regulation Act of 1949. So this is prompting us to remember this act compulsorily, right? They are created with an objective of furthering financial inclusion by primarily undertaking business banking activities to unserved and underserved sections, including small business units, small and marginal farmers, micro and small enterprises and other undeserved sections. Very important one. So these are the underserved sections. Underserved sections are those sections where these sections are not getting the loans properly. But without getting the proper loan, without getting the institutional credit rather, it will become very difficult for them to operate. Clear? Very important one. And like micro and marginal business. Clear? And the marginal farmers, small farmers. So to cater the needs of these sections of the society, small finance banks have been established in India under Banking Regulation Act of 1949. Am I clear? Now, so now let's go ahead and discuss more points here now. Kindly have a look at this. Look at this. So next is the payment bank. I told you already. So these are the public limited companies licensed under the same act with the specific licensing conditions restricting its activities mainly to accept of the demand deposits and the provision of payments and remittance of the services. So this is the latest phenomenon and these are the payment banks. Right? Now let's go ahead. So when it comes to payment bank, I give you the information. This is the new model of banks conceptualized by RBI. These payments banks can accept a restricted deposit of 2000 to 2 lakhs. That's it. So which is currently the limited to 2 lakh per customer. Meaning if I am a customer of a payment bank, I can deposit a maximum up to 2 lakhs only. Beyond that it is not permitted. Clear? These banks may not issue loans or credit cards but may offer both current and savings accounts. Very important one. In the payment banks you can open savings account and current accounts, but they cannot issue any loans, no credit cards. Clear? They may issue ATM and debit cards. Credit cards cannot be issued, but debit cards can be issued. What is the difference between debit and credit cards? Most of you may be aware of this one. Debit cards are those cards where I can debit my own money saved in my own account. I can spend my own money that is saved in my own account. But whereas credit, you are taking the credit from that particular bank. Is that okay? So when you are taking the credit, you have to pay along with the interest. Is that clear? But when it comes to the payment banks, they can issue ATM cards, otherwise called debit cards, but they cannot issue credit cards. Very important. Am I clear? So the draft for guidelines for licensing payments banks in the private sector were formulated and released for the public comments on 17th July 2014. Is that okay? The banks will be licensed as payment banks under section 22 of the same act. Very important one. Am I clear? Even they are also granted licenses. Without licenses they cannot operate. Right? So this is the new concept by RBI, that is the payment banks. Next comes the cooperative banks. Cooperative banks means state cooperative banks, central and primary. Look at this. Primary cooperative banks are also known as the urban cooperative banks. Over the years, it has registered a significant growth in number, size and volume of business handled. That is the reason why wherever you go, you can see the cooperative banks. Similarly, state cooperative banks are the highest level of the cooperative banks and they are present in each state. They raise the funds and assist in their proper allocation among the various sectors. Individual borrowers receive funds from the state cooperative banks via the central cooperative banks and primary credit societies. This is how the hierarchy will function. So cooperative banks are also playing very crucial role in providing the credit, and they are playing very crucial role with respect to economic development in India. Clear? Now look at this. So when it comes to cooperative banks, they are registered under State Cooperative Societies Act of the state concerned, or the Multi-State Cooperative Societies Act of 2002, right? And the banking business is licensed and regulated by RBI. Very important. Is that okay? And these are primarily support the agricultural activities and some small scale industries and self-employed workers. So that is the purpose why these banks have been established. Clear? Now look at this. So when it comes to another very important one, All India Financial Institutions, very important one, and they play important role in the Indian financial system as they provide medium to long term finances to different sectors of the economy. Let's see what are they. They have been set up to meet the growing demands of particular sectors such as the export, import, rural, housing and small industries. That is the reason why the banks like SIDBI, Exim Bank, they fall under all these categories. Is that okay? Look at this. Export Import Banks of India, Small Industries Development Bank of India, SIDBI, National Bank for Agriculture and Rural Development, NABARD, I told you, National Housing Bank, and National Bank for Financing Infrastructure and Development. They all operate as the All India Financial Institutions in India. Very important. I cannot directly go to NABARD and take the loan. Clear? Right? NABARD will not give loan directly to the people. But NABARD was established to serve the needs of the rural development and agriculture. Clear? So that is the reason why NABARD is considered to be a refinancing bank. Meaning NABARD will provide loans to those banks which serve the needs of the people. So people will be taking the loans from those banks, and these banks will be taking the loan from the NABARD with respect to rural development and the agriculture. So that is the reason why NABARD is called refinance bank. Is that clear? Right? So when it comes to NBFCs, I told you already. So they are playing an important role in sustaining consumption demand as well as the capital formation small and medium industrial segments. Clear? And when it comes to the difference between banks and NBFC, let's try to understand now. Before that, we have a question. Look at this. Which of the following statements is or correct regarding NBFC? Very important one. NBFC is a company registered under the Companies Act of 1956, registered under this particular one. It is engaged in the business of loans and advances, acquisition of shares, stocks, bonds, debentures, securities issued by government or local authority, and it is not regulated by RBI. What did I tell you? Whether it is regulated by RBI or not, right? It is regulated by RBI because not is given, C is wrong. So wherever C is present, that should be wrong, and definitely answer should be option A, option 1, meaning both A and B, the statements are correct. Very important one. That is the reason why you need to read the statements very clearly. That's it. Clear? So NBFC is not regulated by RBI is wrong. Note I have given. NBFCs are regulated by RBI. Another question we have. right? Scheduled banks can lend and make investments. Agreed. NBFCs cannot lend and make investments, and hence their activities are not akin to the banks. Right? So, what is the answer for this? You must have a guess now. Right? Look at this. A only. Because, as we have discussed, NBFCs can lend and make investments, and hence their activities are akin to that of the banks. Very important one. Clear? So that is the reason why statement B is wrong. Not akin to that bank system is wrong. They are akin to the banking system. So these are the questions that will be asked in the examination like this, and you should be in a position to answer. And what are the differences between the banks and NBFCs, that you must know. The most important point is that they cannot accept demand deposits. Is that okay? But what is a demand deposit? This is a money deposited into bank account with the funds that can be withdrawn on demand at any time. Right? I told you already. Time liabilities. Clear? Like, net liabilities. Right? So we have discussed. Such type of things cannot be accepted by the so-called, the NBFC. So they do not form the part of the payment and settlement system and cannot issue checks drawn on themselves. Very important one, right? And look at this. So one possible question for you, you may be aware of this one. Which of the following is the largest commercial bank in India? State Bank of India. Clear? Now answer should be option C. Yes, definitely yes. Look at this. Nationalized banks are public sector banks, which are commonly known as government banks. A public sector bank in India refers to a bank in which the government owns at least 51% of its stake. Then only they are called nationalized banks, they are called public sector banks. Is that okay? So when it comes to SBI, currently this is the largest bank in the country, and it was founded in the year 1806 as a Bank of Calcutta. Very important one. Very old bank. It was established in Calcutta in the year 1806. Clear? And today that is considered to be the largest public sector bank in India. Very important one. And as I told you, all nationalized banks are government banks. They are called public sector banks, where government should have minimum stake of how much? 51%. Very important. Clear? And if you look at the list here, this is a list of the public sector banks in India today. The number is 12, and you can just read out all these things. State Bank of India, Bank of Baroda, Punjab National Bank, Bank of India, Union Bank of India, Canara Bank, Bank of Maharashtra, Central Bank of India, Indian Overseas Bank, Indian Bank, UCO Bank, Punjab and Sindh Bank. These are the 12 public sector banks in India. Please remember this. Is that okay? And some more important points for you. SBI merged with its associated bank, State Bank of Saurashtra in 2008 and State Bank of Indore in the year 2010. This is only for your information. Just have a look at this. Following the merger process, 5 other associated banks also got merged. State Bank of Bikaner and Jaipur, State Bank of Hyderabad, State Bank of Mysore, State Bank of Patiala and State Bank of Travancore, and later Bharatiya Mahila Bank also got merged with the SBI. Very important. Government took the decision and all the banks have been merged like this. SBI, its associated banks got merged into it. On February 15th, 2017, the Union Cabinet approved the merger of the five associate banks plus Bharatiya Mahila Bank. Clear? And this merger went into effect from 1st April 2017. That's the reason why since then you are not looking at these banks. You're right, you don't see State Bank of Hyderabad, State Bank of Mysore, State Bank of Patiala. They all got merged into SBI. Am I clear? Next. Next. Right. So consider the following statements. You have a question here. A huge data breach on debit card issued by various Indian banks was reported in October 2016. That became a big issue at that time. This is the correct statement. So hence this is not my answer. Okay. It was estimated 3.2 million debit cards were compromised. That is also correct. Indian banks SBI, HDFC, ICICI, Yes Bank and Axis Bank were among the worst hit. That is also correct. This resulted in one of the India's biggest card replacement drives in banking history, right? Because the lot of data has been compromised, so many cards have been replaced, and later the security measures have been enhanced. The biggest Indian bank, State Bank of India, announced the blocking and replacement of almost 6 lakh debit cards. Huge sensation at that particular time. That was, one of the biggest frauds. And some people have complained that, so their, debit cards are being operated from China. Clear? All the statements are correct. So option 4 should be our correct answer. Am I clear? Next. So this is the answer. ABCD. Fine. So this is regarding banking structure and development along with the questions. And in the next session, we'll be looking at the banking sector reforms in India. Till then, thank you so much and I wish you all very, very good luck.